How do you buy a rental property that's profitable, low risk, and sets you on a path towards long term financial freedom? It's absolutely still possible, and this week we'll walk through the 6 step framework to do just that. Before you even think about where to buy or what to buy, step back and ask why you're investing in the first place. What are you building? Why now? What do you want this rental to do for you? Real estate is full of paths: long term rentals, short term rentals, burrs, flips, house hacks, but none of those mean anything without clear goals. Strategy isn't just about tactics, it's about your plan to reach a specific outcome. And until you define that outcome, everything else is guesswork. Get clear on your goal. Ask yourself, are you building cash flow to replace income? Are you chasing appreciation to grow long term wealth? Are you looking for tax advantages? Do you just want the best possible return on a single deal? There's no one right answer, and most investors evolve over time. You might want cash flow today and then shift towards appreciation later. Or maybe your goal is just to break into the market and learn as you go. That's valid too. Know your numbers. If you're aiming for long term success, it helps to work backwards. How much monthly income do you want from real estate? What net worth milestone are you targeting? What's your timeline? This doesn't have to be perfect math, but even rough targets will help shape smarter decisions now. It's easier to build a plan when you know what the finish line looks like. Decide how hands on you want to be. Your time matters as much, if not more, than your money. Some properties demand your presence, others can run almost on autopilot. Know where you fall on the spectrum. Low touch includes turnkey properties with property managers, set it and forget it investing. High touch is do it yourself renovations, tenant management, or the extreme house hacking. And a hybrid is light rehab up front and then a hands off once stabilized. The right level of involvement depends on your schedule, skills, and appetite for learning. Wilmington and surrounding markets offer options across the board, from low maintenance beach condos to fixer uppers with serious upside. Start with your goals, then build the plan. That's how you avoid wasting time, energy, and capital. Once you're clear on where you're heading, picking the right market and right property becomes a whole lot easier. Step two, pick your market and neighborhood. Once you've chosen your investment strategy, the next step is selecting where to invest. Some investors know right away. For others, this takes some exploring and sometimes a little soul searching. In most cases, investing in a market you already know gives you a huge edge. You understand the neighborhoods, the traffic flow, the types of tenants in each area, and even which streets to avoid after dark. If you're based near Wilmington, Jacksonville, or Myrtle Beach, you already have access to a diverse set of opportunities. Wilmington might offer steady growth and appeal for long term rentals. Jacksonville, with its military population, may provide strong cash flow and rental stability. Myrtle Beach has unique potential for short term or vacation style rentals if that fits into your strategy. But don't invest locally just for convenience. Your market must align with your strategy. If appreciation is your priority, look where values are rising long term. If cash flow is king, you'll need strong rent to price ratios. And if you're aiming for flexibility, seasonal or transient markets might be your lane. Neighborhood matters just as much. Even within the same city, neighborhoods vary widely. For example, in Wilmington, downtown and college adjacent areas might be great for appreciation and tenant demand. On the other hand, areas further inland or nearby military installations like Jacksonville may deliver higher yields but require more active management. Your neighborhood choice should mirror your strategy. Appreciation focused, look for areas with revitalization, infrastructure investment, or new development. Cash flow focused, prioritize neighborhoods where rents are strong compared to home prices. Short term rental, look for walkability and tourism appeal. The right city is only half of the equation. The right neighborhood is where your deal either thrives or dies. Be selective, let your strategy guide the search. Step three, build your buy box. Now that you know your strategy and where you want to invest, it's time to define your buy box, your personal blueprint for what to buy and what to skip. Think of your buy box as a filter. It saves time, removes emotion, and helps you act fast when the right deal shows up. Without one, every Zillow scroll feels like starting from scratch. With one, you're scanning with a purpose. Start broad, then narrow. Begin by answering a few high level questions: residential or mixed use, single family home or small multifamily, long term rental or short term, urban, suburban, or rural. In Wilmington, you might lean towards single family homes near downtown or the beach. In Jacksonville, duplexes near military bases offer strong demand. In Brunswick County or Leland, new builds and HOA communities can mean low maintenance and stable tenants. Choose what fits your strategy, not what's trending on YouTube. Next, match your financial goals to realistic numbers. What's your max purchase price? What monthly rent range are you targeting? What minimum cash flow or return do you need? You don't need to get fancy. Even a simple I need 250 plus monthly cash flow per door or I want 8% cash on cash gives you a compass. From there, you can reverse engineer what kind of property makes that math work in your chosen market. Dial in on physical criteria. This is where it's time to get specific. What property traits matter most to you? Year built? Do you prefer newer builds or are you open to historic homes with character and quirks? Layout: open floor plans, separate entrances for duplexes. Condition: move in ready, light cosmetic updates okay. No goes: septic tanks, flat roofs, flood zones. In areas like Carolina Beach, flood insurance is a real factor. In older Wilmington neighborhoods, knob and tube wiring or cast iron plumbing might be deal breakers. Make a list of your must haves and your no thanks. The best buy boxes include local features that drive demand. These are things renters in your area actually care about and will pay for. In Wilmington, off street parking near downtown is gold. In Jacksonville, proximity to Camp Lejeune, stable demand. In Leland, fence yards and updated interiors, fast lease ups. Near the beach, outdoor showers, storage for kayaks or surfboards, and flood resistance materials can boost appeal. Want to know what tenants value most? Ask a local property manager or chat with a leasing agent. They'll tell you what gets rented fast and what doesn't. The buy box equals clarity. It isn't set in stone. You can tweak it as you learn more, but it gives you a solid starting point. Property type, price range, target rent, key features, deal breakers. Once you have this dialed in, you scroll past 100 listings and only pause on 2. That's the point. Focused investors move faster and smarter. Step 4, find deals. You've got your strategy, you've picked your market, and you've built your buy box. Now comes the part that turns all that prep into action: finding properties that actually fit. In real estate investing, we call this deal flow, a steady stream of opportunities to review and run numbers on. The more quality deals you see, the better your odds of finding the one that checks all your boxes. And spoiler alert, the perfect property is rarely sitting there waiting for you on day one. That's why you need systems in place to see new opportunities quickly and consistently. Number 1, work with an investor-friendly agent. Yoo-hoo! The fastest way to get deal flow in the Cape Fear region is to partner with an agent who knows the investor side of the business. That means understanding which properties are most likely to cash flow, where appreciation potential is strongest, how to spot red flags before you waste time or money. I know how to search the MLS with investor filters in mind, tap into off-market networks, and connect you with local pros you'll need: property managers, contractors, inspectors, so you can move confidently when a deal makes sense. Most investors in this area come through on-market deals, but they're often hidden in plain sight. With the right eyes on your side, you'll see them before the crowd. Number 2, use technology that works for investors. Zillow and Realtor.com can show you what's available, but they won't tell you if something will hit your return targets. That's where investor-focused tools or a skilled agent, yoo-hoo, with the right spreadsheets comes in. When I send you properties, they're already pre-screened for potential cash flow, estimated rents for the area, maintenance considerations, local demand drivers. This saves you hours of guesswork and keeps you focused on deals worth analyzing. Number 3, go direct to seller. This is optional. Some investors like to get creative, mailing letters to owners, driving for dollars to spot potential opportunities, or networking for word-of-mouth deals. This can work well here, especially in Wilmington's historic districts and certain parts of Brunswick County, where owners may not be actively listing but are open to offers. The trade-off? It's more time and resource intensive, and you'll need patience for follow up. If you're interested, I can guide you on what neighborhoods and property types are worth targeting. Bottom line, the Cape Fear area has deals, but they go to investors who have eyes, systems, and speed. Partnering with the right agent gives you all three. You From MLS alerts to off market leads, we can keep your buy box full of strong candidates so you can move fast when the right opportunity shows up. The prep is done. Now it's time to start hunting. Step 5, analyze, offer, negotiate. Now, the deals are flowing in. It's time to separate the winners from the money pits. This is where smart investors either set themselves up for years of passive income or lock themselves into a headache. The good news, this part isn't rocket science. You don't need a finance degree to run the numbers. You just need a disciplined process and the right local guidance. Yoo-hoo. Step 1, quick buy box check. When I send you properties, they'll already fit your buy box, but it's still smart to double check. Does it meet your property type, price range, and location goals? If yes, then we dig into the math. Step 2, run the numbers the right way. Many new investors fall into the trap of thinking rent minus mortgage equals cash flow. That is a recipe for disappointment. True cash flow accounts for every cost of owning a rental, including maintenance and repairs, capital improvements, vacancy allowance, turnover costs, and reserves for unexpected expenses. Here's how we'll approach it together. Number 1, estimate income. Use local rent comps or connect with my property management network to get accurate figures for the Cape Fear market. 2, estimate expenses. Plug in real conservative numbers for taxes, insurance, utilities, if applicable, HOA fees, and all the items above. 3, run a conservative cash flow projection. If it still looks good, move forward. If not, next. The truth, in today's market, maybe 1 in 20 properties will pass this test. That's normal, and it's why patience pays off. Step 3 is to look beyond cash flow. Cash flow is king, but it's not the only factor in your return. We'll also evaluate loan amortization, the equity you gain just by making mortgage payments, appreciation potential. Certain Cape Fear neighborhoods have growth trends worth noting, and tax benefits. Depreciation and deductions can give your returns a boost. Step 4, negotiate like it's 2025, not 2021. The market has shifted in your favor. Sellers can't just name their price and wait for multiple offers. You have leverage, and we'll use it. Here's how we'll approach offers. Target properties with price drops, long days on market, or sellers whose contracts recently fell through. Make offers that account for potential short-term value dips. Ask for concessions with real monetary value, like seller-paid closing costs or mortgage rate buydowns. Remember, in a buyer's market, you are the prize. The right negotiation can mean thousands in savings or years of better cash flow. The bottom line, over the next 3 months, we might review 50 Cape Fear properties together. Maybe 5 will pass the math test. We'll negotiate hard on those 5 and choose the one that gives you the best combination of cash flow, upside, and protection from risk. This step isn't about rushing. It's about landing the deal that works for you now and 5 years from now. Step 6, due diligence and closing. Protect your investment. Once you've negotiated a winning deal, the work isn't over. This stage is where you protect your investment and ensure there are no costly surprises waiting for you after closing. Due diligence means confirming every detail before you sign on the dotted line. This includes inspections, uncover hidden repairs, safety issues, or major systems nearing the end of their lifespan. Renovation bids. If you plan to add value, get contractor quotes now, not after closing, to ensure your numbers still work. Rent verification. Confirm local market rents and ensure they align with your cash flow projections. Expense review. Double check utilities, insurance, taxes, and any HOA or maintenance obligations. In today's buyer-friendly market, there's no need to waive protections. If something serious comes up, you can negotiate repairs, request seller concessions, or if necessary, walk away and wait for the right property. Final expert tips for 2025. Cash flow is king. Every property should break even or better after renovations and stabilization. Don't gamble on appreciation alone. Keep reserves. Have 5 to 15K set aside for unexpected expenses. Buy in strong locations. Well-established neighborhoods hold value better in downturns and bounce back faster. Avoid over renovating. Focus on improvements that drive rent and value without overextending your budget. Negotiate everything. Yoo-hoo! Price reductions, seller paid closing costs, and mortgage rate buydowns all add up to real savings. 2025 is shaping up to be a buyer's market. Motivated sellers, more inventory, and room to negotiate. The key is following these 6 steps. Set your strategy, find your market, build your buy box, generate deal flow, analyze and negotiate, do your due diligence. The opportunities are here for disciplined buyers. The only question is whether you'll seize them before the market shifts again. If you want an investor focused agent who can help you find, analyze, and negotiate the best deals on our market while protecting your downside, let's talk. I'll help you build your buy box, source properties that fit your criteria, and guide you all the way to a confident closing.